Well, good day, subscribers. Hope you guys are having a great day out there. As always, today I'm going to share with you 3 stock market tips that will hopefully make you a lot more money in the stock market over time, and also hopefully save you some money from making a mistake. All right, I've been in the stock market. If you're new here, I'm Jeremy. I've been in the stock market now for over 10 years, and in the position I am in, I feel like I have to kind of share some of these tips with you guys that are beginners in the stock market. Some of you guys that have been investing for less than a year, which you are a beginner in the stock market if you've been doing this for less than a year. And some of you guys are probably watching this video right now that are still yet to get in the market. You haven't really invested any money. So this is a video for you guys, or some people that maybe have been in the market for a while, but you just haven't made a lot of money yet, and you're kind of like looking for that opportunity. I've always had the majority of my wealth in the stock market, and I've always just been focused on building that number bigger and bigger. The stock market can be a very fun place as long as you have the right mindset, the right strategy, and a work ethic for this, and staying disciplined. You can make a ridiculous amount of money over time. You can build incredible amounts of wealth. You got to just have your head on straight and have the right strategy. So I hope these 3 stock market tips I share with you guys here today hopefully make you a lot more money over the coming years, and hopefully save you some money as well. And without further ado, make sure you smash the thumbs up button if you enjoy me sharing these 3 tips with you, and let's get into this. Alrighty guys, stock market tip number 1. This is going to help save you a lot of money in the stock market and hopefully make you a lot of money in the stock market. And number 1 here is don't blindly follow the trend. So many times in the stock market, people blindly follow whatever the trend is, and this ends up losing them a lot of money or not making them a lot of money. Here's what ends up happening sometimes in the stock market. You have individuals out there who see a stock going up or an industry that's really hot, and they're like, look at this industry, these stocks are going up every day, it's getting crazy, man, I need to jump in this. And so they go ahead and they start sticking their money in some of these stocks, right, that are the hot stocks. And what they find is very shortly after, those stocks start to go down. Keep in mind, everything in the stock market, if it goes up too high and it gets way overvalued, eventually that price starts to drop, and it drops a lot. And so folks will think, oh my gosh, these stocks just keep going up. Oh my gosh, this industry, look at over here, everybody's making so much money. I just got to throw money in these particular stocks over here. And they go ahead and do that. And a lot of times they get absolutely destroyed. I've seen it time and time again where beginners in the stock market will blindly follow a trend and end up losing themselves a lot of money. I've also seen on the flip side where people think that just because Wall Street hates a stock at a particular time, just because Wall Street, there's not a lot of buyer momentum in the stock, they think that's a bad stock. Absolutely not. What matters is a business's fundamentals underlying in that business model, okay? And where that's going over time. How do you tell all that? Reading 10Ks, reading 10Qs, listening to conference calls, doing the actual work necessary to pick great stocks, okay? And what people end up doing is they're like, oh, that stock's down 30% this year. That means that's a bad stock because Wall Street doesn't like it. Absolutely not. That could be a diamond in a rough opportunity there. I buy unbelievably undervalued companies all the time. And some of our best gainers are on stocks where everybody hates at a particular time. We get in it when everybody hates, and when that stock price is way low. And then all of a sudden, the market comes back to reality, and they realize, whoa, we went way too far in the stock, and the stock goes up a dramatic amount. I remember ELF stock earlier this year, right? Around February, March, we were buying that stock like crazy. Wall Street hated it. Wall Street hated that stock. It went down to like $7 a share. And now here today, here we are, what, 9 or 10 months later? Not even 10 months later, about 9 months later. And not even 9 months later. I'm thinking now it's like 7 months later, 8 months later. And ELF stock's gone up over 100%. We made over 100% on that position in about a 7-month time. That is ridiculous, okay? And how did we go ahead and do that? We did the work necessary to understand Wall Street's got it wrong with this stock. We didn't blindly follow the trend. Everybody hated that stock. We got in that stock, and we made a triple-digit gainer in literally 7 months' time. That's absolutely incredible, right? And that's how you really make a lot of money in this game. And you can't just buy stocks because they're down and just to say, oh, I'm going to be contrarian. You got to pick those rare opportunities when you fully research the business, you understand it, you know everything that's going on, and Wall Street doesn't see what's going on there. You went ahead and found that opportunity, you invested in it, and that's how the real players make a lot of money. If you're someone that wants to outperform the market, you can't blindly follow trends. You'll end up losing a lot of money and you'll miss out on some phenomenal opportunities when Wall Street doesn't like a stock at a particular time. And here you are, you come in, you've done all your research work, and you're like, they've got it wrong with this stock. I'm gonna buy. You go ahead and take advantage of that opportunity. And I've seen a lot of people that have taken advantage of some incredible opportunities when the market dips, when everybody hates the market at a particular time, or just when sometimes these stocks get way undervalued and they have the vision for it and they're like, dude, Wall Street has it wrong, because they get it wrong all the time. This is what happens, and this is how you can get unbelievable gains in the market, okay? So stock market tip number one, don't blindly follow the market. Trust me, you will regret blindly following the market if you do that, okay? Let's get into number two. Stock market tip number two for beginners out there. This is a big one, guys. This is a huge one, okay? Is always think about the reward and the risk when getting involved with a stock. Way too often people get just focused, blindly focused on what's the reward opportunity in a particular stock. They see the stock, they read about the stock, they read about this industry, they're super excited about it, and they're just thinking about how much money they're gonna potentially make in the stock. They're thinking about the reward, the prize at the end of the day, and what they don't even take into account is the risk involved with a stock. See, the stock market at the end of the day is one big game of risk reward, I call it, okay? What is my potential reward with this stock? How much, the valuation of the stock, where can I see this going over time? The market cap, what type of market cap could this company have over time? Versus, what's the risk going in with the stock? How much could the stock potentially drop if things go bad? What is the probability that things will go bad? All these things should be accounted for, okay? How do you know the risk involved with the business? Well, one, you look into the business fully. And in the 10K, which is an annual report for a company, they're gonna have an entire section just on risk factors for the business. And this is one of the most important things you could ever read up on a company. Looking at all the risk factors so you know, okay, there's this risk factor, there's this competitive threat out there, this could go wrong with the business. Because if you understand that, it allows you to make a much better judgment on a stock overall, rather than just thinking about, oh, I could double my money in the stock. Oh my gosh, I could potentially triple my money. That's great. Definitely think about what's the potential reward. But if you're not taking into account the risk with this, you're just making a big, big mistake. Make sure you're accounting for the risk. Make sure you're looking at the competitive threats for that business. Who's trying to come after them? Because if you're talking about, you're buying stocks, right? These are companies with hundreds of millions of dollars in market cap, billions of dollars in market cap, tens of billions, or even hundreds of billions of dollars in market cap. When you're talking about gigantic corporations like this, right? Everybody wants a piece of that pie. Everybody wants to eat their lunch. Everybody wants to come after them. So all competitive threats need to be thought about. All risk factors. Are you looking at the balance sheet? Are you looking at how much cash they have versus debts? Are you even paying attention to this type of stuff? It's absolutely paramount you do that so you know going into that stock, here's my reward potential over here. Here's my risk potential. I do this with every single stock I own. I think about what can I see this company going up to if everything goes right, if my bullish thesis plays out. And if it doesn't play out, what's kind of the worst case scenario for this? And what's a bad scenario, maybe not worst case, but what's a bad scenario for that stock as well? What would the stock go down to in those terms? And the whole idea is taking the least risk possible while having the biggest reward potential possible, okay? That's why the stock market is a big game of risk reward, and you should always treat it as that. So make sure you're thinking about the risk and not just thinking about the reward, okay? That is stock market tip number 2 for you. Let's get into the last one, number 3. Stock market tip number 3 for beginners out there is, and this one prevents so many people from even getting involved with the stock market or investing in general. And this one really bothers me because it's one of the reasons why most folks never really build any wealth in their lives. And it has to do with don't have mistake anxiety. So many folks have mistake anxiety. So they think, okay, I'm thinking about investing in the stock market. What if I make a mistake? What if I put the money in the wrong stock? Oh my gosh, what if I lost money? And because they have that mistake anxiety, they can never even invest in the stock market. And I'm like, it's so ridiculous. It's unbelievably ridiculous, because think about it like this. Imagine if you were trying to become a basketball player, right? And you're about to take a shot in practice and you're like, I can't take this practice shot. I can't do it because I'm afraid I'm gonna miss the hoop. It is so ridiculous. You would never get good at anything in life if we all thought like that. You would never get good at anything in life if you have this anxiety. And so many people have this anxiety about, what if I took my $1,000 and I put in this stock and it went down to $900? And they just like can't mentally get by that. And it's so ridiculous, honestly. It's so ridiculous at the end of the day, because how are you ever gonna, if you can't take any risk, you're never going to make any real money in this world. And you might as well just throw in the towel now and say, I'm going to be broke for the rest of my life. If you can't get past the fact that you do have to take some risks to get potentially a lot of reward, then you're just going to be broke forever, okay? I've never known one person in my life who was well off and didn't take some levels of risk financially to get there, either through investing or career decisions, or they took a step on their own and they started a business. You have to just get past that anxiety of, I might make a mistake, I might lose money. Okay, let's say you make a mistake. Let's say your worst case scenario happens. You put $1,000 in a stock and you lost all 1,000, like literally the company went bankrupt. First off, if you had the right strategy, you knew everything to look into, there's almost a 0% probability that would even happen. I've never once in my life ever invested in a company that went bankrupt, okay? That is ridiculous, okay? I never was like in a stock and it was like, oh, they went bankrupt. Like, how ridiculous that would have to be like invest in a stock and like they declare bankruptcy. Like, I can't even like fathom that. It is so ridiculous, okay? I've made mistakes in the stock market. I've lost money on some stocks in the past, okay? And I've never once been involved with any company that was like, oh, they just went bankrupt. Like, that is so unbelievably unrealistic. As long as you are understanding the risks going involved with the stock, you're looking at the balance sheet, you're looking at the income statement, where the business trends are going. As long as you're doing the real work behind it, it's almost statistically impossible, okay? But let's say that happened. Somehow you had $1,000 in a stock and it went to zero. Is that the end of the world? No, it's not. That $1,000 didn't change your life. What will change your life dramatically is the next 1,000 and the next 1,000 and the next 1,000 and building that into the next 1,000 and building up the ladder, okay? That's what will actually change your life, building the wealth. The fact that people have so much mistake anxiety is what ends up costing them more money than they ever believe, because they never get involved in the stock market. And don't be in that situation. Don't forget to smash that thumbs up button. Thank you for watching. Have a great day. Share this with somebody.